Welcome back to our special coverage of the Reserve Bank of India's Monetary Policy Committee. And as promised, our guests are standing by to help us decode the fine print of what we just heard from the governor. We have Ashish Vaidya, Srinivas Valdarajan, Pranjal Bhandari and Soumyakanti Ghosh. Pranjal and gentlemen, thank you for your time here on CNBC TV18. And Pranjal, let me start with you. Any additional takeaways from what we just heard from the governor in the press conference, whether that was on the liquidity stance or the concerns on inflation?
Yeah, thank you very much. Now, the general sense is that it didn't turn out to be as hawkish as some people had feared. Some parts of the markets were even wondering if there could be a rate hike today. So from that perspective, things look a bit easier than they had feared. But my sense is different. My takeaway is that this policy statement is far more hawkish, and it's actually suitably hawkish that people are taking it to be. And there are, many reasons for this hawkishness. One, I think the governor himself said that they had an option of not changing the inflation forecast. They may not have done it every time, but they still did it, still increased it. I think there was a sense of urgency that came from there. The second was, they spoke about looking through the vegetable price increase, but they also said that you can't constantly look through all of these price increases because at some point they sort of play up and they ruin the inflation expectations trajectory for you. When they increased the inflation forecast to 5.4, they also said that they're assuming normal rains. So imagine if the rains are not normal, there's some problem, then actually inflation could turn out even higher if you think from that perspective. So I think from many perspectives, this remains a hawkish commentary, pretty much like the last policy meeting. It's not as dovish as the markets are thinking it out to be.
Mr. Soumyakanti Ghosh, what did you make of it? Do you think the Reserve Bank of India is playing safe, with this 30 basis point revision in the CPI forecast, given all these uncertainties that Pranjal was just highlighting?
Yeah, I think, Ritu, the policy statement is actually you have to read between the lines. And if you do a simple maths, you will actually come to the conclusion. Just to take about the liquidity in very shortly, I think the increase in incremental NDTL is around 9.36 trillion during the period. So the 10% excess CRR means 93,600 crore is the amount which the banks have to add, which actually means an additional 47 basis point over 4.5%. So this in effect implies that there is actually this tantamount to saying that there is a rate hike of around 40 to 50 basis points if this incremental CRR is also taken into consideration. The good thing is that this is temporary, and we have seen in the past also that the RBI has used this tool in the 1990s after the demonetization when they imposed 100% incremental CRR. But I think as a tool, it's not a tool for liquidity management. And as the governor correctly pointed out, it's a temporary tool. So from that point of view, this policy statement is actually a little bit on the hawkish side because it talks about an increase in impounding liquidity, which translates into some sort of an increase at the shorter end of the curve. And finally, if you look into the other statements, I think most of the statements make out the fact that while the increase isn't transitory, they will look through it. But given the fact that they have now changed the forecast for next year first quarter also, I think that means and giving a communication to the market that rate cut is unlikely to start anytime soon in the near future.
Well, especially given the reiteration of the 4% middle inflation target, and the forecast is all the way to 5.2% under the first quarter of the next year. But Ashish Vaidya, do you think because of this incremental CRR, in the meantime, Soumyakanti says about 93,600 crores of liquidity could be mopped up. In the short term, in the money market, rates would harden?
Yeah, good afternoon. So, clearly, this is drawing liquidity out of the system, and the rates will harden a bit. But my sense is that this hardens just by about 15 to 20 basis points at max, and then liquidity sort of stabilizes. The governor did point out that while 1 lakh crore will get out of the system because of this, there is a VRR maturity of about 93,000 crore that is coming up. So that should sort of equate and keep the system well balanced. And I think that's the intention of the RBI. I think the market has sort of noted this point. And I think it's taken it well. And that's the reason why the markets are fairly stable for now.
Okay, thanks for that. the press conference concluded. So some key takeaways from all of you would be warranted. But first up, I want to congratulate Srinivas. He was the only one who was expecting something on the lines of the CRR hike because of the increase in circulation. The RBI had said that it will be a little over 1 lakh crore. When I tried to pin them down between 95,000 crore and 1.1 trillion, he said little over 1 lakh crore. So, Srinivas, congrats, and what's your sense? As Ashish said, just a near-term passing impact?
Hi, Lata. Thank you. Thank you for those compliments. So, I mean, the numbers vary. Like Soumya Kant basically mentioned about 93,000 crores. Our estimation is the total increase in NDTL between 9th May to the 28th of July is about 11 lakh crore. So the 10% incremental will be a lakh and 10,000 crores. And the reason fundamentally in terms of why I anticipated this is going to happen is if you really go back into history, during the demonetization phase, when demonetization took place on the 8th of November, on the 26th of November, the incremental CRR was imposed at 100% of the increase in NDTL between September and November. And to some extent, the scale is much lower this time, obviously 10 times lower. And that's what kind of motivated the thought process in terms of the end of the financial year, liquidity situation will get more balanced. And in fact, the Reserve Bank of India will probably need to supply some liquidity through the...
Okay, fair point. Soumya, on this date of September 8th, see, September 15th is advanced taxes in again. The governor repeatedly said 20th the GST payments are made. So do you think it will be just September 8th and that's it? The likelihood of it getting continued will not be there because there will be a huge outflow on September 15th.
Yeah, I think Lata, I think I entirely guess so because it is purely a temporary measure because the fact is that there are liquidity outflows scheduled from the beginning of September, and also we need to take into consideration the fact is that the credit growth continues to remain strong. So the Reserve Bank actually would not like to alter this delicate balance between liquidity mismatch in terms of inflows and outflows. I think the sense is just to keep sure the market's tight and in terms of the inflation forecast so that nothing goes out of control. Because as the fact that and it has been mentioned by the governor also in terms of the vegetable prices being a temporary phenomenon, but to make it sure that we use this tool, and it is clearly, and I mean, what I will say, I mean, it's clearly a tool which is not the preferred tool of liquidity management, because CRR is not the preferred tool as RBI has emphasized repeatedly. So I also hope that this is temporary and it will go away by September 8th.
September 8, yeah. I think the September 8 date has been chosen very carefully so that for advanced taxes you don't create a huge illiquidity situation or a deficient liquidity situation when the taxes are paid out of the banking system. Looks like that. I was just checking that with you. Pranjal, this 5.2 for April, May, June, year after, 2024, much higher than the 4.5 which they gave us earlier. There are some economists who say that this is entirely mathematical base effect and a little bit of the momentum. Do you think we should take it as a hawkish sign, or is it not at all a hawkish sign? It's entirely dovish because Q4 they have left unchanged at 5.2.
Lata, my sense is that this policy has been quite hawkish. If we read between the lines, I think the message is clear. The governor has said it in so many different ways. Once he said that they didn't really have to change the inflation forecast. You don't have to do it all the time. They could have easily done it in October when you get a better sense of how the first advance estimate of production is looking for rice. But they still went ahead and increased it this time. Means there is some urgency out there. They also increased while saying that is even if monsoons are normal. So if you read between the lines, if there is some friction in rains, they slow over the next month or two, then actually inflation could be even higher than that. And this 5.2 number also, it sort of lingers on over March and then over the June quarter. So there's some pressure that goes into the medium term as well. So my sense is that when I look at all the inflation numbers and the inflation commentary, then it was hawkish. One final point was on transmission. They spoke about how transmission is incomplete and they doubled it up with a footnote which spoke about how there hasn't been enough transmission. I haven't seen something like that in the previous policy statements. And then there is liquidity, right? The fact that the whole 14-day VRRR route was not being taken up. So they gave you something more forceful, like the CRR. Although it is temporary, but it is forceful at the same time. So my sense is the overall package is a hawkish package, and it's suitably hawkish at a time when there are just so many moving parts. Global commodity prices are rising. El Nino, we don't know where it's going to end. Our own sowing has been, quite all over the place. So I think it is suitably hawkish.
Okay, got that. Mr. Chakravarti of the Shriram Group is also with us. Thank you very much, Mr. Chakravarti, for participating. I wanted to ask you, how will life change for NBFCs? Do you see the cost of capital rising at all, even for the shorter term?
No, shorter term, I don't think so. I mean, we are also having the same debate yesterday and today. And I don't think shorter term, we don't expect any impact as of now.
Okay. But you're saying, are you suspecting that things can get more expensive for you as banks reprice deposits? Are they likely to raise the lending rates for people like you all?
No. As Pranjal is saying, probably we will look at the first quarter of next year. I don't think anything, we are not anticipating anything in this financial.
Okay. And then there is this proposals announced for infrastructure development funds announced by NBFCs. No part of Shriram Group is involved in this. I mean, I could only think of PFC and REC and IIFCL. This doesn't impact y'all at all. Y'all don't issue infrastructure bonds.
You don't.
You don't. Okay. So what would be your takeaway from the policy at all? Life goes on unchanged?
Life goes on unchanged. I think looking at a lot of uncertainties and probably, the government banning rice, thinking of allowing wheat into the country, imports of wheat into the country, and then, China slowing down. There are so many uncertainties. And if China goes and does a big stimulus, so basically on the oil side. So I think what the RBI has done is pretty sensible, and I think there probably a couple of quarters of wait and watch.
Mr. Chakravarti, just one more question on this incremental CRR that has been announced. How does it impact you, if at all? I mean, your borrowing costs in the very near term because of this 1 lakh crore liquidity being sucked out of the system. What happens to that?
I mean, you heard the experts on the panel, so obviously it gets balanced. So we don't expect any. As far as Shriram is concerned, we don't expect any tightening of liquidity for us.
Okay, Mr. Soumyakanti Ghosh, with this 5.2% CPI projection that we have for the first quarter of the next year, what is your sense in terms of how the rate cycle now moves? The cut is pushed away even further?
Yeah, I think, Ritu, we have already pushed our cut to the next year first quarter. And with this 5.2% forecast, the Reserve Bank is actually trying to anchor market expectations of not to expect of a rate hike even in the first quarter of next year. Because if the inflation forecast is at 5.2%, I think that's maybe a little bit on the upside. But I think that's the way the market communication by the Reserve Bank is factored in, that inflation, if it stays above 5%, don't expect us to go for a rate easing cycle. As of now, I think let's play out this increase in inflation as the way the market sees it. But over a point of time, we should keep the rate steady and be cautious and vigilant in seeing that there are no upside surprises to the inflation trajectory. And this incremental CRR hike, I think, just a tool which is temporary, so that and it's a message to the market that we will not go for rate hike, but we'll use other tools so as to quell any expectations mismatch which happens in the system.
Okay, Shaumya, if I can ask you to continue in that vein, I had a kind of similar question. Would you say that this policy is not as hawkish as you expected? What is your comment on this 5.2? It seems to be entirely base effect and a slowing momentum from fourth quarter. Would you characterize this as, neutral rather than hawkish?
See, Lata, I think if I just go by past expectations, in 1990s there was an incremental CRR which was imposed because of an excessive capital inflows. In 2016 it was a demonetization impact, and this time it has been the liquidity impact. I don't think that was a drastic impact because 2,000 rupee notes has been changed and there has been the merger. So from that point of view, if we consider this increase in incremental CRR and also the inflation forecast upward revision, I think the policy tends to be a little bit on the hawkish side than what the market would have expected.
Okay. Just a last word, Ashish. Where are yields ranged for the moment now? Say up until the end of the year.
Yeah, no, first of all, let me tell, I think, yes, at the margin, this policy is on the hawkish side because there are a lot of uncertainties around. On the yields, on the yields, I think broadly we are in the range of about 7.10 to 7.25 on the 10-year. But mind you, one point I want to make is that we are somewhere at the toppish end of this rate hike cycle across the globe, hopefully. If there is some disinflation that comes in because of slowdown, etc., this is the only chance we have for the next 6 months to 12 months. If that doesn't pan out in the next 6 months to 8 months, I think then we are clearly going to be higher for longer without any cuts. I think at the markets, we sort of are looking at that possibility as well. So steady for now. And the only possibility which we have over the next 6 to 12 months is one dip down. And I think otherwise it's going to be stable and stable for longer. We are not looking at any massive disinflation.
Okay, very quickly, when is your first cut? When is your first cut?
I would put it as
Ashish,
second
when
quarter.
Is your first cut expectation?
Yeah, I would put it at more at June.
Second quarter of FY25.
Yeah, right. Yes.
Okay. Srini, a word on whether you would call it hawkish at all and your first cut?
No, it was mildly hawkish, to the extent that they upped the inflation forecast to 5.4. But however, I think the incremental CRR is just a passing phase and it should get over. But we are at the peak of the cycle, and I expect a cut sometime in April of next year.
April, okay. Shaumya, your date?
We have already said first quarter of next year, but there could be some pluses, not minuses, in terms of the month.
First quarter of next fiscal or next calendar?
First quarter of next fiscal.
Fiscal, okay. So more or less April or June. Pranjal?
Yeah, I think it seems about the same, about the middle of 2024. But I also want to add here that even if you have a few rate cuts, I think it will be a shallow rate cutting cycle this time. It's not going to be as dramatic as people were thinking a couple of months ago.
Okay. Hardly a cycle then. Mr. Chakravarti, where are you hoping for that? A cut?
I concur with the experts here. So, as I said, probably next one.
Right. Okay. All right, we will leave it at that. Pranjal, Shaumya, Ashish, Mr. Chakravarti and Srini, thank you very much indeed for joining us, joining me and Ritu to parse what the governor said at the press conference. The takeaway is mildly more hawkish than what the market expected, but actually the market was expecting a slightly hawkish policy. So perhaps as expected, that's it from the Reserve Bank headquarters and from the CNBC studios on the monetary policy. After a break, you will have Business Lunch with all the news headlines.